People are saying, Paul, we want to see the advanced technical analysis you do. We want to see real technical analysis. My technical analysis is too advanced. It's too advanced. People out there, BitBoy Crypto, Tone Vase. If you look at my TA, the chart guys, doesn't. If you look at my TA, forget these people. If you look at my TA, you'll understand exactly. I'm going to show you this TA today. I'm going to show you this TA right now. We're going to jump in my computer and I'm going to show you something no one else shows you on YouTube in crypto because they're just not on my level, okay? And we're going to do this right now. So let's jump in my computer and let me show you right now. All right, so here we are in TradingView, and I just want to remind you again, we're going to do some advanced technical analysis here. So just bear with me, try and listen, try and keep up, because no one else on YouTube or anywhere else is actually doing this. This is like the serious, deep technical analysis, okay? You can actually tell because I'm using a white screen. Most YouTubers use black screens because they want to look cool, right? They use dark mode. We're using a white screen here, okay? So here's what we were talking about, the Wyckoff distribution phase where we went down, okay? We went down here. And I'm just gonna remind you one more time that my technical analysis, the simple version I keep on telling everybody is, listen, if we go under 40K psychological, I'm gonna be worried because we also break some averages there and so on. Right now we're in a range as we've been saying, and if we break the 44K, then the 47K would be quite probable or more probable. Let me just correct myself, and then we should be going up from there. If we go down, we close below the 40K on the weekly, I will be worried, okay? But let's get like really advanced now, okay? Let's get really advanced. So the first thing we want to do, we want to draw some lines here. So I'm going to take this here peak before we went up and went down, right? I'm going to take this peak right here on this candle. I'm going to draw a line. This is actually a trend line, okay? So this is the peak right here. I took it from the top of the candle, but if you can see, it's pretty much served as resistance again, right? Before it starts serving as support. This is a support line. As we keep on testing this is the 42,400. Now, where I'm worried about is the 40,000. That's my line in the sand, if you will, right? This is my line. My line in the sand is the 40,000. So let's just get a line here, okay? Just give me 1 second here. And as you can see, it's concise with these tops right here. This is the range we're looking at. I'm worried if we break below 40,000. Now, if we do break below 40,000, we can bounce back up quickly, do like a V-shaped recovery and break some resistances. That would be fine. That is quite possible. I'm just saying in general. Now, let's start getting serious, okay? There's a swing high, if you will. And this is what we need to break to keep on going up. Now, here's something interesting though. If you take this high here, okay, I'm giving that line again. If you take this high here and you put it here, right, and forming a triangle, okay? If you do that again from this one here, right, and you do that again, this Wyckoff, this is something no one will tell you about, this Wyckoff strategy right here. This is how we're going to see if it's a real Wyckoff distribution, right? You pretty much, okay, it's not perfect, but you pretty much, this is what you do. You put all the lines pointing to this top here, and you do the same right down here at the very low, okay? Watch, no one else is talking about this, guys. No one else is talking about this. You probably don't see it yet, but bear with me. Then we're going to take a Fibonacci. Now, I'm going to do this a bit different than everybody else, okay? So bear with me, because what we're going to do is going to grab this point here, and we're going to go to the top here. No one's doing this Fibonacci this way. No one uses the Fibonacci this way. And we go right to this top here, upside down. Now, here's where it gets interesting. All these lines that come to here, if I grab one, if I grab the top one, right? If I grab the Fibonacci, sorry, and I'll move it up above the highs here, right? Now, why would I do that? Well, what most people don't talk about, let me just move this so you can see it a little bit better. Give me a second. Just for your sake, right here. Okay? See, we have to use what we call imaginary numbers, okay? Imaginary imaginary, I'm using a mouse, so forgive me, imaginary numbers. If you remember in school, you actually learned about those. Now, what are imaginary numbers? Imaginary numbers are imaginary, right? So right here, we have the 70,000, right? But I went on top, but I can't see the top of my screen. That's where you get the imaginary numbers. So what I'm gonna do now, using this, I'm gonna grab another line and take it from here, right at the end, from this 64.9, and bring it back there. And I'm gonna do the same for this point right here. Now bear with me, because this is really important, okay? If you miss this, I'm just gonna take the three basic ones. No need to get these small ones right here. These are irrelevant, okay? Just these ones, these main three ones, okay? And now what I'm gonna do is I'm gonna actually use this tool right here. Now watch, I'm gonna get this point A to B to here. Then I'm going to do my B to the imaginary number somewhere around here. Somewhere around here, there you go. And my C, I'm going to put it straight back to this point here. Do you guys see this? Do you guys actually see this, right? Because what we're going to do now, we're going to draw another Fibonacci. No, we're going to use this range here. And we're going to bring it right here. Now, why am I using this range here? You will see later. Let's put some indicators on now, okay? Because these are important. But we want to use a couple of these. Let's use the Arun, because this is the Arun down here, right? We want to use the balance of power, because that's very important. Because power is, if you've read the 48 rules of power, power is extremely important, and we want to use Bollinger Bands and width, okay? Now, what we want to do now is actually draw a circle, okay? It doesn't really matter what kind of circle, but this circle right here, it's corresponded to this this range right here. Now I want to use a circle because it's important right now, because what I want to do is I want to predict if we break this and we get into this circle, no matter where we go into the circle, whether it's here, 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 it doesn't matter as long as we get into this circle. Now, what I want to do now is grab this again and do one more to this area again. Now, do you see that? Wait. If you see this, these are all your ranges. No one talks about this. No one in crypto talks about this, okay? And what I'm going to do, I'm going to highlight this part right here so we can see it. Okay, now you can see it because it's the same color as this. And what I'm going to do is I'm going to take the path, because this is the path of we took. We took this path here, right? Then we went all the way here. And here we're going to draw a smiley face. Okay, we're going to draw a smiley face here because this is where we started going up. But look at this. If you look at that smiley face and you do this circle range as smiley face, we're right on track. We're right on track where we're supposed to go. Right? You can see this, yes? You can see all this, yes? You imagine everything. You see where everything, right? Now, this is what people don't show you. If you pay attention, you will see that this point here, and let me change the color here to red so we can see what's going on. Let me make it a bigger pixel. All right, now, this part here, 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 and here, right? We could do smiley face. It doesn't really matter because all here we're smiling because we know what's going on. We end up here, right? And if you take the top, go down, go back up right here to the resistance area and go back down, this, the 40 to 42,000 is where we accumulate. Because there is where we're going to go up again, right? See, this here corresponds to what I've been talking about with you guys about the 40 to 42K. We need, well, 44K. We need to break the 44K on the upside, or we need to drop from the 40K level, right? And trust, no one's showing you this, right? Like, let's be honest. No one is showing you technical analysis like this. Now, let's start now, because this might look confusing, but don't worry, it's going to all make sense in just a second. See, your Y cuff, Okay, what's your Wyckoff distribution? Okay, this is why. Why is it called a Wyckoff? It's Y cough, meaning why should you cough? Why should you cough? You shouldn't cough, right? Because the why cough means why worry? Why should you cough about this? That's what it's called about, because once you go down, right, you start going up, and then you cough again at this area here, but this time the cough is a sneeze, okay? This is a Y sneeze area. Y sneeze area, meaning it will go up here to this very section that we've been talking about. And look, that's better. We can actually see the scribbles better, okay? If you take the low here, right, and you right, and the low here, right, and you actually, kind of like join these, what do you see here, right? What do you see right here, right? So all this is we can get more. We can use all indicators and use abandoned baby bearishes, so we can see what's going on. Maybe the dark cloud of rain, because when there's a dark cloud it usually rains, right? So it rains all over the chart, right? But it's very clear here. It's very clear that 40,000 is very important, and we need to break the 44,000 to continue going up, because if we don't, we're going to go down, right, again. Okay, so there you have it, from the best, from the very best.